this evening, our big story is that slippery slope that crude prices find themselves on. They've slid and they've done it again. Brent crude has seen a cut of more than 5%, trading at around $108 to the barrel. Brent crude trading below its 100-day moving average. It's for the first time this has happened since January this year. Oil prices have gone down after those reports emerged that the U.S. President Joe Biden is calling for a federal fuel tax cut. Biden is expected to urge the U.S. Congress to greenlight a 3-month suspension on federal taxes on gasoline. Fuel prices have been skyrocketing in the United States, and this move is expected to bring relief to consumers there. But let's see whether this is sustainable, whether this kind of slide is something that is going to be a short-term phenomenon, or will there be a rise again? To understand what's driving the fall, let's connect with Christopher Haines. He's an oil analyst at Energy Aspects, and he's joining us on India Tonight. Thanks for making the time, Christopher. Christopher, do tell us, how much do we owe this fall in crude oil prices to the possibility of Joe Biden going ahead and cutting taxes on fuel in the U.S.? What do you suspect is the American game plan where oil is concerned?
Yeah, hi, Vikram. I don't think that's really got very much to do with it at all, because actually, if you're cutting prices, you're supporting demand, which is going to take even more oil to make the gasoline that you need. So I think, what the US is really trying to do is just kind of get prices down. That's a key message that they're trying to get across over the course of this summer. The actual implementation of that is going to be very difficult, because this is something that will probably have to go through Congress, and they might not be able to get the support for it. But they need to be seen to be doing something to try and kind of bring oil and more importantly, kind of gasoline and diesel prices down. I think the sell-off in oil is probably more to do with a kind of a wider macro risk-off sentiment. We saw a big move in other markets, in equities, in other commodities, after you saw that Fed rate increase rise. And now we're kind of seeing that filter through into crude. Before then, crude had held up pretty well.
So, Christopher, if this is a macro risk-off kind of reason that we can ascribe to the fall in crude oil prices, will this fall be a short-lived phenomenon, you think, or are you expecting these prices to inch up again soon?
Yeah, so I mean, nothing's really changed in global fundamentals, right? So we're still actually very constructive at Energy Aspects over the summer. I think if you look at the wider kind of moves in crude, you have seen these kind of jumps and then the corrections. And I think what we're getting now is a correction. And we have, as you mentioned, kind of fallen through that 100-day moving average. But I think we're almost kind of getting the short move through the market, and we're bearing up for a much stronger second half of the year. I think, one of the things that a lot of people forget about is that we've kind of come this far in 2022. Oil prices have been very high, and we've done that without Chinese demand. For most of the first half of the year, China's, pretty much been struggling with these lockdown issues. So if we get China back, and that's something that we think is really going to happen, just because you're going to have, the government really pushing for economic growth, then we're definitely heading higher.
You talk about China, which I suspect heads towards, at least points towards a possible demand challenge. But those who are bullish on oil, Christopher, they seem to argue that there is no crude available and we are staring in the face of a supply challenge. How far do you believe this is true?
Yeah, look, we're definitely short crude. We've been, I think as well, we've had these record SPR releases. The US is currently releasing 1 million barrels a day from its strategic petroleum reserve just to kind of cover the shortness in the market. Yet we're still at $110, $120 per barrel. So yes, there is a structural undersupply in the market, because we've had this huge loss of investment over the last 7 to 8 years, just in that kind of typical down cycle that you get. But at the end of that down cycle, we got hit by COVID, so it got extended, and we're in a very precarious situation. I think we need to find some crude from somewhere. Otherwise, we're going to have to see a correction on the demand side. But we're not quite at that point yet. I think globally, demand is very, very good right now.
But Christopher, crude prices have been rising at a time that the world is expected to slow down, even if not go into a full-blown recession. So how do you justify that? Is there a possibility of a bubble forming somewhere that might just burst in the oil market? If you believe that the positions on oil, they are highly leveraged, some would argue.
No, I mean, but I think that's precisely feeding into the undersupply story, right? We don't have enough crude oil. So the fact is that we are pricing in slower growth, and that's probably what's come through in prices in the last couple of days. But still, when we get to the end of this year, we're going to be short crude versus the demand that the globe is asking for. So we can have this situation where we do have slower growth, but we still have high oil prices.
Before we let you go, Christopher, are we expecting the strength in the US dollar to persist? Because now at the levels that the Indian currency finds itself at, it's at historic lows against the greenback. So that strength that we've seen in the US dollar, is that likely to continue to persist?
So, I mean, if you look at the way the Fed's moving, they seem to be leading the interest rate rises. US economy and the US market is still an attractive place to keep your money on a global basis. And I think the rest of the world is kind of it's got to chase the US higher in order to make sure that they're not losing out on any kind of investment. So for now, is very little to see any kind of strength issues in the dollar, I think.
Christopher Haines, thanks very much for joining us for your perspective, and indeed we hope to connect with you soon.